The BRICS clearly want to trade something real for something real. And the dollar is not something real, so they're not going to accept that. What you're going to see is the standard of living decimated by 50% or far more across the West.
Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira, part of the outreach team of Silver Bullion here in Singapore, where we want to help you truly secure your wealth. Bill Holter joins us today. Bill has worked as a retail stockbroker for some 23 years, and today, amongst the many hats that Bill wears, he is also a precious metals expert and broker with Miles Franklin. And we're delighted to have Bill join us once again today. It's time to saddle up and silver up for Bill Holter. Bill, welcome back to SBTV. How are you doing?
Good, Patrick. Thanks for having me back.
Glad to have you back on. I'm going to start off with the inflation numbers that recently came out, where the prices for goods and services increased by 0.2% for the month, putting the 12-month inflation rate at 2.9%, its lowest since March of 2021. Outside of all these numbers here, Bill, should this be cause for some sort of celebration, this batch of inflation numbers?
Well, do you really believe that's the true inflation rate?
Exactly.
I
Exactly.
mean, all you have to do is go to the store or get your electric bill or whatever. Obviously, I mean, all of the government numbers, whether it be unemployment, inflation, productivity, whatever number you look at, they're they're massaged. They've been they've been changing the way that they calculate numbers since the 1980s. And I mean, if they were calculating inflation the way they did in the 1980s, we'd be in the high teens, maybe even 20% at this point.
I hear a lot of people say that, and I really believe that as well. But with the Fed, they have this dual mandate of price stability and maximum employment. Is this a, let's say, a possible cause for this never-ending cycle of booms and busts?
Well, I mean, that's not the cause, the dual mandate. The cause is that we've lived so far beyond our means since 1960. I mean, the deficits have exploded. You're looking at 35 trillion in debt. It's not payable. Their back is absolutely up against the wall, both the Fed and the Treasury, which have been merged. They were merged, what, 2 or 3 years back.
It's interesting you use that word merge because some politicians, I'm not going to give a name because of the YouTube algos. They seem to not like to hear that name, but number 45, let's say, he's been floating the idea of having more of a say in Fed monetary policy, which would essentially politicize the economy. What's your view on this?
Uh, I don't think it matters what is done. I mean, the math is the math. The math is unworkable. There was talk a week or two back that they want to basically monetize the gold that's in Fort Knox and West Point, uh, even assuming that we do have 8,300 tons, which I don't think, I mean, I think maybe we have 10% of that or 15% of that. But even if we had 8,300 tons, they want to revalue it from $42 up to the current 2,500, and that will raise somewhere around, I don't know, the number's about $600 billion, and they want to buy Bitcoin with that, and that's supposedly going to wipe out our debt. Well, uh, I mean, you're talking about you'd have to have uh, you'd have to have that $600 billion go what 50-fold or more in order to wipe out the debt, and they're putting it into Bitcoin, which again, in my opinion, it's digital air. It's nothing. And we're going to find out when everything collapses that that's exactly what it is nothing but digital air.
Yeah, that idea is being floated around as well. But with the dollar, we already see weaponization of the U.S. dollar, which is still currently the world's reserve currency. But would something like this, where the world's reserve currency is more susceptible to being politicized, or let's say the gold that was supposed to be there is found out not to be there, and then it's being sort of backed in a way by Bitcoin in a sense, would this even cause more nations to want to de-dollarize?
Well, that's exactly what's happened. The weaponization, it's not a new thing. The dollar has been weaponized for years and years, and they started ratcheting the the uh, the weaponization up during the previous administration. Um, and now you've got they basically stole the $300 billion of Russian treasuries, and they're borrowing or using that as collateral to fund Ukraine. So it's been totally weaponized, and there's been pushback. The pushback has been the formation of the BRICS. And we're only 2 months away from the big BRICS meeting in Russia. And I think that very well could be, if you want to call it the reverse Bretton Woods moment, where the dollar actually loses reserve currency status because they no longer want to trade and use dollars for settlement. And the amount of dollars that have been used in settlement, that's been, it has been declining, but it's going to go off a cliff. And especially if they announce a 20 to 40% backing of their new currency, they're calling it the unit. If they back that currency with 20 to 40% gold backing, you'll see pure fiat currencies collapse, and you'll see the price of gold explode.
Yeah, that's a great point. I mean, considering the timing of it all, they could make this announcement, let's say, before U.S. elections, and I believe if they should do that, that will really throw things into a tailspin.
Well, yeah, and I mean, obviously, the hard stop, if you will, is November 5th. That's the election. And I've been on record since, I guess, November last year that I thought there was less than a 50-50 or less chance that there'd even be an election, because if it looks like uh, the current administration is going to lose power, you will see some type of enormous false flag so that they can say, well, we would have had an election except for this. And I mean, the BRICS meeting itself blowing up the dollar, that alone could uh, could throw markets into such a tailspin that they close and they just pull the plug out of the wall.
This false flag, let's say, should there be one, what do you think it may be? Another like financial collapse, let's say, or possibly war, let's say, or more conflict in different areas?
It could be anything.
Anything, yeah.
Yeah, it could be anything. I mean, these people are so crazy. They could even nuke a city and try to blame it on Iran or something. Um, I mean, the lengths that could possibly go. And I mean, we could go back and you could look at, you know, false flag after false flag for years and years and years. And I guess the big one where it really all started was 9/11. I mean, that was a huge false flag. You had the economy was collapsing, the markets were collapsing, and the Western playbook on how to turn an economy around is to start a war. So I mean, war is more than likely going to be the uh, the final response. And in today's world, you're talking nuclear. In today's world, that's kicking the table over. It's changing everybody's life from here till your grandchildren are dead. So I mean, for the next 100 years, things will change.
If you're enjoying this interview with Bill Holter and I, please consider subscribing to our YouTube channel. And did you know that at Silver Bullion, there are 6 different types of accounts to fit your needs? To find out more, go to www.silverbullion.com.sg, click on the signups tab, and choose from these 6 types of accounts. Or email me, Patrick at silverbullion.com.sg, and I'll help to get you started. playbook. I mean, I think a lot of us understand how that playbook comes into play, where they will look at a war to kind of right the economic ship. But this time it's different. I mean, should this come into
Yes,
play,
it is.
right before there was never a challenger to let's say the U.S. dollar, or a challenger to the military power, but it's very different now today.
Yeah, it's very different because Russia has hypersonic weapons. We don't have hypersonic weapons, and I think it's extremely foolish that they're sending another carrier group uh, over to that region. And I mean, you could have a carrier taken out with a hypersonic weapon. What would the world look like tomorrow morning if you found out, overnight a carrier got sunk? We're no longer the biggest, baddest bully on the block.
Yeah, it's a sombering thought. You mentioned the 35 trillion in debt. I guess going to that debt clock where we see things like this 35 trillion. I looked at it earlier today, and about every second there was about $20,000 more in U.S. debt being held by foreign countries. More debt being issued while the trade deficit is still growing. More oil is being imported. How are these countries, let's say, holding the U.S. debt? How are they going to be paid back?
They won't. They won't be paid back. They'll be paid back in dollars, but the dollar, I mean, it may cost you $50,000 for a cup of coffee. So getting paid back in a currency that's basically worthless, what other than for appearances, so that they can say no, the U.S. never defaulted. They'll just deflate, or yeah, they'll inflate the currency, the dollar away, and they'll deflate the purchasing power to zero. So no, that 35 trillion won't get paid back. Um, and the true number is over 200 trillion, um, because you got to add in Social Security, Medicare, Medicaid, Fannie Mae, Ginnie Mae, all the promises that the government has made. And all those promises basically are worth zero because we don't have the ability to pay it back.
Right. And so this is where oftentimes we hear where the Federal Reserve, is basically going to be the guy to be buying up most, if not, I don't want to say all, but most of the US debt. Should that happen, I mean, how is it where you have a country paying a bank, a private bank, to issue the currency, and then yet pay interest on top of that, and politicians just still run wild spending money and just making the debt larger and larger?
Well, if you go back to it's almost 200 years ago now. If you go back to Andrew Jackson, that was the argument back then. He did not want uh, a private banking system. He wanted the Treasury to issue currency. He wanted debt-free money. And that's been the problem, is that all money created carries debt, and the private bank is the one earning the interest.
Yeah, part of the reason why I'm asking these questions is because, with this added uncertainty of the US dollar and its demise, looking both internally and externally, why isn't the US looking harder at getting back to sound money such as silver, such as gold?
Because they can't do it. I mean, if we truly had 8,300 tons, or I mean, you look to the east. I mean, China's probably got 35,000 metric tons. I mean, I can show you easily, 25,000 tons. There's no question in my mind that they have that amount. But the U.S. does not have that metal that they can revalue, and, if you want to call it, refurbish their balance sheet. Um, they don't have the gold. They don't have there's no big stockpile of silver. And at this point, all it is kick the can down the road. They're trying to pretend and extend. And we just had an event, a week and a half ago. Japan's market collapsed. They lost 25% in 3 days. And I view that as, that's the warning shot of the global margin call that's going to come. And I expect that margin call to come between more than likely between now and the election. And we were told that the carry trade was 20 trillion. That's basically on books. Then you got to add the OTC to it. And is the number double? Is it triple? Is it 10 times? I mean, is the carry trade really 200 trillion and not 20 trillion? I mean, who knows? But what they're trying to tell us now is that 75% of the carry trade was eliminated in 3 days. And that is complete bullshit. There is absolutely no way that 20 trillion was unwound. And what took 30 plus years to build up was cleaned up in 3 days, and no one died.
Yeah, I mean, when I heard that carry trade thing, I was thinking to myself, well, wait a minute. They've been at low rates, no to low rates for decades,
Right.
and now all of a sudden this thing comes into play.
Well, understand that it all occurred because the Bank of Japan raised interest rates 0.15%. 0.15. And that blew up a 20, they say a $20 trillion carry trade, and that 75% of it was cleaned up in 3 days. And you didn't see one institution go bankrupt. That's complete folly. There is no possible way that 75% of something that took 30 years to build up just went away poof and nobody got hurt.
Right. You have any idea what it might have really been?
I certainly think if on books it's 20 trillion, then you've got the OTC positions. It's probably several multiples of that number. There's no telling uh, how much central banks from all around the world had to lend to banks. Remember back in, what was it, 2010, we found out that the Federal Reserve had lent out 17 trillion all over the world back in 2008, early 2009. We didn't find that out for like a year and a half. So by the time we find out what just happened and how much had to be put into the system to keep it from imploding, the system will have already imploded.
So we'll keep our eyes open and kind of piece together what might have really happened there. But with Asia and the BRICS, as you mentioned, they are looking at sound money, some type of a gold backing the unit. They
Right.
being the most populated regions on Earth, a manufacturer to the world, an energy supplier to the world, and let's say they are using this currency that nations can trust to settle trade. How does the West economically now compete with this?
I think the simple answer is two words. They won't. I mean, they won't be able to compete. And I mean, if you think about it, if the BRICS currency comes forth, and you've got nations all over the world selling dollars because they no longer need to hold dollars to buy oil or to settle trade. Who's going to buy those dollars? I mean, is it the Federal Reserve that steps up and buys the dollars? And with what capital do they do that with? I mean, the Federal Reserve right now is technically insolvent. I mean, they've lost more on the bond portfolio than they had in equity to begin with. So, is it even feasible to print new dollars to buy old dollars? I mean, that's you're blowing the money supply up. You're contracting it on one part. You're you're uh, you're expanding it on the other part. But in order to create dollars, to buy dollars, you have to have a buyer for those dollars, someone who will accept the dollars. So I mean, you're looking at the reserve currency losing reserve currency status, which is roughly 60% of the average central bank in the West. That's what they hold. So what are they going to trade with? Because the BRICS clearly want to trade something real for something real. And the dollar is not something real, so they're not going to accept that. What you're going to see is the standard of living decimated by 50% or far more across the West. Because I mean, you're not going to get a Chinese company or a Russian company or any of the BRICS companies. They're not going to ship goods to the United States in with payment in dollars. They're going to want payment in the BRICS unit, or they're going to want payment in another something that's real. Wheat, natural gas. I mean, go down the list, but they're going to want something real for something real. And because they've financialized the Western economies, the Western financial systems for literally going on what, call it 40 years, we don't make anything anymore. So we don't have stuff to trade back something real for something real. We're going to have to start all over again. And like I said, the standard of living is going to be completely decimated.
You think the U.S. is possibly at a risk where that something real for something real, as you call it, at the risk of losing, let's say, agricultural land, pastoral land, maybe even real estate or things like that?
Well, the risk is that foreigners take these dollars that they've accumulated for all these years and they present them back to the United States in the form of, I want that piece of property, or I want that manufacturing facility, or I want those patents, or whatever. They're going to present those dollars back to the United States for real stuff. Yeah, that will bid the prices up, but we're going to be left with dollars that are worthless and have given away, real.
Yeah, this 50% decimation. Let's call it. You think this is when we're now going to see something like MMT, Fed now, central bank digital currencies, maybe going
Oh yeah,
cashless? Yeah, yeah.
yeah. That I mean, obviously, in order to bring forth a central bank digital currency, the average person in the United States does not want a central bank digital currency. They want to stay on the system we have now, which is untenable. But what will happen is the financial system will come down. People will lose the vast majority of their assets, and the government will come out and say, we're going to issue this central bank digital currency. We'll put some money back in your bank account, and things will be better. And people will beg for that. They'll beg for the central bank digital currency that if you and I had those and we did this interview, they would shut our account off. I mean, it'll be complete monitoring, social credit scoring, and they'll be able to uh, shut your life down overnight for for whatever reason. They're the ones who get to decide what the reason is, and you'll have no recourse.
I'd have to agree with you there. I mean, this is the world that we live in today. But Bill, because of these things and more, yes, people do go into things like precious metals as an insurance, an investment, wealth protection, or perhaps whatever it may be. We see gold hitting all-time highs, but far from it with silver. Why do you think silver is it's although it's in high demand, we don't yet see price reflecting this?
Well, because it is sold short with paper contracts. It's such a small market, Patrick. Total global production of silver is only $20 billion. So it's a very easy market to control. And they absolutely have had to control silver going back uh, at least 30, 40 years because the dollar is in competition with gold. Gold is the anti fiat, the anti dollar. And there's no way you could have silver running to 200, 300, $500,000 an ounce and gold not move. So in order to be able to keep gold in a box and be able to point at it and say, see, gold bad, dollar good, they've had to just sit on silver with paper contracts that are completely unbacked. I mean, they came out in the early 2000s with the ETFs. And if you read their prospectus, do they really need to buy any silver or any gold? No, they can be 100% contracts and still be following the prospectus. So they don't have to have physical metal to control the price. They're doing it through paper contracts on COMEX, CME. And if you look at what's going on in Shanghai, there's what, a $3, $4, $5 premium of silver there versus silver here. And what's happening is you're getting an arbitrage where silver is being depleted from the inventories of London, of New York, and it's ending up in Shanghai. And it's interesting to note that the Shanghai inventory of silver just dropped. I think they're less than 1,000 tons now, and that's the lowest it's been for quite a while. Or I think it might be the lowest it's been since they started that market. So long story short, they've had to suppress silver. They cannot let silver look good. They cannot allow the public to stampede into silver, because if that happens, then gold blows, and when gold blows, so does the dollar system.
That's a great point there, Bill. Appreciate that. So let's say someone listening to this, or they're considering buying precious metals. Your opinion: does he buy gold or does he buy silver? Does he look at the ratio? Maybe take a look at platinum. What would you offer?
Well, if you're just starting, you want to have silver because you're going to barter with silver. When the system goes down, silver will give you on hand money. And gold is that's where you transfer your large wealth from this system to the next system. I would say if you've got 100,000 US dollars or less to invest, I would do all silver. And if you had $1 million, I'd still do 70-30. I'd do 700,000 in silver and only 300,000 in gold. And as that ratio comes down to say 40-50, silver will have outperformed double over gold as far as purchasing power, and you can sell some silver, buy gold, and you'll end up with more gold ounces than if you just bought it outright today. It's a ratio trade, is all it is.
Totally agree with that. That's great advice there. Um, let's say other types of precious metals, junk silver, and then of course bullion, which we talked about, and then there are collectibles, numismatics. What unique role does each have for buyers of precious metals?
For an American, and especially where prices are now, junk silver is basically the same price as a 100-ounce bar or generic rounds or whatever. But junk silver, if you're going to do silver other than an IRA and you're an American investor, you want nothing but junk silver. It's $4 an ounce cheaper than Silver Eagles. It's the smallest denomination. It's not counterfeitable. It's readily recognizable. It's issued originally by the U.S. Mint. Junk silver is the best form to own. In gold, if you're an American, I would look strictly at gold eagles or pre 1933 gold. And you mentioned platinum, palladium, the other quote precious metals. Those are not monies. Those metals basically are have industrial uses. They're industrial metals. And when the real economy stops, how much demand is there going to be for palladium and platinum? How many catalytic converters and other uses where's the demand going to come from? Whereas gold and silver are monies themselves. And, a lot of people say, well, silver is really an industrial metal. Well, yeah, it depends on where in the cycle you are. Yes, it is an industrial metal, but when the shit hits the fan, silver is going to be the money of the people because they can afford to buy a small amount of it and they can barter with it. Gold is the money of kings. That's where you're transferring your wealth from one system to the next. You can buy property with it. You might be able to buy a car with an ounce of gold or whatever. So gold is the money of kings, and silver is the money of the common man. And those other metals that you mentioned, they're industrial metals. And I personally, I can buy them for you. I can trade them for you if you wish, but it's not my recommendation at all.
Last question here, Bill. We're kind of taking a look more at silver here. How much silver? Because I get this question all the time. How much silver should a person, let's say, have?
If you can afford one bag of junk silver per person in your household, I would recommend that you have no less than that on hand. Uh, and one bag is $1,000 face. It's 715 ounces, and at current price, you're probably looking at, I don't know, $22,000. Uh, but let's say you had all dimes. One bag has got 10,000 dimes. That would give you up to 10,000 transactions as opposed to eagles or maple leafs or generic rounds. You'd have 1,000 coins. Let's say you had 100-ounce bars. You'd only be able to transact 10 times. And what do? You're going to walk around with a hammer and chisel some off and have a scale and say, here's how much silver there is. I mean, uh, dimes and quarters in today's world, they are the best form of barter there is for an American.
Right. Um, Maybe this is a different different example, but let's say for people who are very well off, very wealthy, should they be looking at, let's say, 100-ounce bars or 1,000-ounce LBMA bars?
Why? I'm saying why in today's world, if a 100-ounce bar and 100 ounces of junk silver are basically the same price, why wouldn't you want to own the best form for the same price? Because a year ago, if this was a year ago we were talking about, junk was $10 per ounce higher than the 100-ounce bars. Now that premium has bled away. Premiums across the board have come down to very, very close to spot prices. So if you could buy something that in the future will go to a huge premium, why not why not buy a Cadillac as opposed to a Volkswagen for the same price?
And that is why you are considered to be a precious metals expert as well as a broker. Bill Holter, I really do appreciate that. And before we head out, can you let the people know how to see more of your views and work, or follow you on social media?
Sure. My website, it's just over a year old now. It's just billholter.com. I post, I don't know, three, four, five articles a day and put comments to it. There is a contact button on there if you want to reach me. I would urge that you subscribe. It's free. You don't pay anything for it. But when the articles go out, and they usually go out once a day, or they post once a day, if you're on the subscriber list, it'll go right to your mailbox, and you can see exactly what has been posted. So it's an alert that there's new articles up to be seen. If you want to contact me directly, my business email is bholter@proton.me.
All right, Bill Holter, you gave us quite a bit to consider, and I'd like to do this again soon before election time, and so we can kind of see how things are starting to ramp up and see how things unfold.
Well, we'll try to do it again before we can't.
Amen. That's a good way to put it. Bill, I appreciate your time, and yeah, let's do this while we still can.
Thank you, Patrick.
That was Bill Holter sharing his views on precious metals and the economy. To see more of Bill's views and work, please go to www.billholter.com. If you like this video, please do subscribe, give it a thumbs up, and share. All are greatly appreciated. Audio-only versions of this interview can be found on iTunes and Spotify.